Okay, look, I'm a big fan of index funds. A huge reason for that is that they outperform almost any other investment. But I understand that they will not be the difference maker and they will not make me filthy rich. This has nothing to do with what returns you manage to earn each year or what index funds you choose to invest in. In fact, I will show you later why returns don't matter that much and that there is another factor that could have more impact on your long-term results, according to Vanguard. And most importantly, I will address this post from a Reddit user who says that he only lost money by investing in index funds. I think you'll find this very helpful and you should consider it a wake-up call if you find yourself in a similar situation.
I'm sitting in index funds for the next 30 years. That's my plan.
We've broken the tyranny of the indexers.
Retail right now, they're just buying ETFs. They're not really individually picking stocks.
Article after article and video after video tell us to keep it simple and only invest in index funds and avoid everything else. So why are we promised that we can achieve millionaire status with index fund investing? It seems almost too good to be true. But let me show you what I mean by running the numbers. Let's say you're going to invest £300 every single month without fail for 30 years, and I'm assuming an average annual return of 8%. I'm also going to say that we'll increase our £300 contribution with inflation rate. So now let's see the results of how many millions we're going to have. Okay, so 572,000 after all of those years in real terms. That's it? What good is that going to get us? Well, apparently in the UK right now, to live comfortably, you need £20,000 per year. This isn't exactly anything flashy. It just means that you get all your bills covered, you can spend a bit of money on clothes and food, and you're allowed to have a holiday for a couple of weeks per year. But if we adjust this figure by inflation over 30 years, £20,000 is equivalent in purchasing power to about £48,545 in 2054. So this would mean that we'd only be able to take out this amount for just 11 years, and then we'd have nothing left. Or we could keep it invested and hope the returns in the future give us something good. So it's not exactly life-changing, is it? Where are the millions that you were promised? What was the point of investing your whole working life if it just all ends up like this? Just for the sake of the example, what does it actually take to get to £1 million? Using the same example as earlier, it will require us to invest £550 per month every single year for 30 years, and also increase this amount by the average inflation rate of 2.5%. So we're being pretty strict here and end up with just over £1 million. Now that's a lot of money to invest for many people around the world. And here is the first problem. If you don't have much money to invest, index funds won't make you rich. It's as simple as that. In reality, the way to get rich from investing is to earn more money so that you can invest more year after year. This chart shows how long it would take you to reach £500 or dollars using different contribution rates and market returns. And it assumes an initial contribution of $10,000 and annual contributions of $5,000. As you can see from this example, although the annual market returns stayed lower, increasing the contribution rate reduced the time needed to meet the £500,000 objective. In this scenario, an increase in the contribution rate of 5% while earning a return of only 4% was much better than not increasing your contribution at all and earning a better return. In other words, as long as we continue to increase our yearly contributions, we will be in a better position than if we kept the same contribution for 30 years while hoping for higher returns. That's the reason why the outlook for the stock market is somewhat less important for long-term investors. And how do you invest more money? By earning more money, which is why you may need to upskill to be able to progress in your career and earn more, or figure out how to create another income stream, for example by starting your own side hustle. These things obviously take time and hard work, and also life gets in the way. You will face increased expenses along the way, which means your disposable income will get squeezed and so on. And that means most people will sadly not be able to maintain, let alone increase their monthly investments. Anyway, I'm not saying you can't make money by investing in index funds. That's not the point of this video at all. I just want to set realistic expectations, because if we go into investing expecting to double our money every year, we're likely to be very disappointed. One of the biggest factors in how much wealth we can generate through investing is always going to be the amount we invest initially. The more we invest, the better our money compounds, leading to greater wealth. However, this isn't about skill. It's about how much you can earn and how much you can invest without selling literally for decades. I think before you start investing, you need to ask yourself whether you can handle it and how you'd feel if you saw losses around 50%. Could you continue doing this month after month for years? The reality is that many people would likely find it very challenging to keep up. And this leads me to this Reddit post, which says, I've only lost money by investing in index funds. This person goes on to say, I invested all of it into total market index funds. On top of that, I've been investing 15% of every paycheck into these index funds as well. So I'm pretty much all in with my savings. Checking my account today, the balance is still quite less than the principal amount, meaning I haven't even made a single dollar yet. I've only lost money investing into index funds. I'm now understanding that I probably bought when the market was at all-time highs, but it's still disheartening to know that putting the cash under my mattress would have yielded better returns over the last 2 years. The reason I'm sharing this is to highlight that many people think like this. They want to get rich quickly, expect the market to always go up, and then panic when their portfolio occasionally shows losses. But just think about this. You're holding these assets for life. If your home, for example, drops 15% in value, you wouldn't panic sell it. Although we are told to continue buying and holding our investments during good and bad times, especially to bad times, most people fail at this. For example, let's say you invested £10,000 in a Vanguard S&P 500 index fund on January 1st, 2008. 1 year later, your investment is down to £6,000. You've lost 40% of your money. You're now worried. Headline after headline warns you that the market will decline even further and it won't recover for the next 5 years. Anxiety about your investment shadows you throughout the day, and finally, nearing your emotional breaking point, you sell. However, the market soon rebounds. Weeks after selling, you then decide to get back in and swear that this time you'll remain invested no matter what. So the idea of becoming rich through index fund investing is great, but living through the daily volatility is something else entirely. What makes it even more difficult to stay invested through ups and downs is that the more your portfolio value grows, the more you have to lose when the market drops 30, 40, 50%. Of course, those losses wouldn't be realized until you actually sell your investments. Until then, they are just paper losses, and the same goes for gains. But think about it, at the beginning, the value of most people's portfolios will be quite small. So if the market drops, say 40% shortly after you start investing, you don't have that much at stake, which means the likelihood of you selling off is quite low. But as your portfolio value grows over time, the story is completely different. Therefore, it's this psychological aspect and the urge to sell when the market is down that will stop many people from becoming rich through index fund investing, or any other form of investing for that matter. Now, your goal as an investor might be to become a millionaire or simply to earn enough to enjoy the freedom to do whatever you like. Everyone has different goals and paths to reach them. However, I wanted to illustrate that the investment itself isn't what will guarantee you a millionaire status, as there is no guarantees. I just wanted to show the type of journey you need to undertake to get there. Even with all this said, I'm making this video as a future reminder to myself really, explaining why index funds are still the best way to go. None of us can predict the future. There is no promise or guarantee that we'll see any returns from our investments in the coming years or even decades. However, with an index fund, at least you know that they will match the market's returns minus any fees. I'm also not suggesting that you should only invest in index funds and avoid everything else. Find what works best for you, but approach it with realistic expectations and a clear understanding. In fact, check out this video next to see whether you've started investing too late and what you can do to catch up. See you there.